Good morning, everybody. This is Andrew Ross Sorkin of the New York Times. I'm the founder of DealBook, along with Michael de la Merced this morning on our DealBook debrief call. And we are thrilled to be joined this morning by Paul Krugman, of course, the New York Times columnist and Nobel-winning economist. And we have so much to talk to him about. There's so much in the news about the economy, of course, the bailouts, deficits, and what all this means and where we are headed. We want to make this conversation as interactive as possible. So let me encourage you early on, and I know so many of you have already sent questions in, but please do so, and you can do that on the Zoom window now in the Q&A chat function. And Michael is going to be taking those questions and bringing them into the conversation throughout. So I'd encourage you to ask those questions. This is an audio-only call. There is no video on this call, but we will make an audio replay of the call available. That'll be in the DealBook newsletter tomorrow. It'll be on nytimes.com later today, and also, of course, on social media. So with all of that, let's begin this conversation. Paul, thanks for joining us.
Yeah, hi. All this stuff is a whole lot easier now that we can do it at the dining room table in a sweatshirt. So anyway, yeah.
So here's my question to you. You're the professor. You're used to giving grades. We've talked over the years lots about rescue plans and all sorts of things that have happened over many, many years. But here we are. When you look at the administration's reaction thus far, and I'm thinking mostly of the Treasury and the Federal Reserve, what kind of, from an economic perspective, we can debate the health issue, which is the meaningful driver of so much of this, but from an economic perspective, how would you grade the response?
Okay, so the Fed gets an A. What the Fed has done is incredible. If you looked at what was happening in the second half of March, we were right on the edge of a global financial meltdown. It was a very close run thing, and Jay Powell has way exceeded, I think, anybody's expectations in his success at coping with that. So let's hear it for the one piece of the U.S. governing structure that really does seem to know how to do its job. In terms of, it's not really the administration's response. I mean, the CARES Act and all of that is a bit of a, if anything, it looks kind of like 80% a Democratic bill and 20% a Republican bill with very little of it reflecting Trump administration input. And overall, it's kind of a B in concept, but it's looking like a B minus or a C in terms of implementation. I mean, we got a lot of the stuff that we needed on paper, but the money isn't actually making its way through yet to the people who need it. So I'm actually very concerned about how this is all going.
In terms of the execution, in terms of these SBA loans, the PPP loans, making it to the right to small businesses, one of the fascinating statistics I saw earlier this morning was that 90% of loans that had been requested in Nebraska by small businesses have actually been approved, but only a fraction, about a quarter of the loans that small businesses have been requesting in the state of New York and New Jersey, clearly the hardest hit places, are getting those loans.
Yeah, I'm not so much, I mean, there's a lot of question about exactly what's determining who gets it. And a lot of it, we don't know. I mean, there will probably be scandals aplenty when we find out more about it. But I think the biggest problem, let me say, first of all, that I actually think the SBA program is secondary. The most important piece of all of this is the unemployment insurance expansion and enlarging the categories, expanding the benefits, and that is actually really a good plan on paper. The trouble that it has to run through state unemployment offices, or it doesn't have to, but the way it was done was it's being administered by the same people who do that program normally, and those offices have been underfunded. They just don't have the resources to handle this kind of surge. Plus, in fact, many states have actually deliberately made unemployment insurance hard to collect. That story in today's Times about that, so that that thing has really just kind of broken down. I mean, even in blue states, even in states that kind of like government, this is the case, the state of New Jersey, issued a desperate plea for people who know how to program in COBOL, which basically nobody younger than me knows how to do, because their computer systems are so old that they use basically historical interest only software. So we have this massive, in principle, expansion of unemployment benefits, but we're not able, huge frustration, the money isn't flowing out to very many people yet. On the small business thing, the thing is that we did I mean, there are multiple mistakes, but one of them was that we, instead of saying, here's an entitlement, here's the criteria, if you meet the criteria, you get the money, they said, here's a slug of money, here's some criteria, first come, first served, with, by the way, banks, not a federal agency, deciding actually who gets it. And we created something like the Oklahoma land rush, a massive mad dash for a limited amount of money, in which, of course, the best connected players got the money. And the people who needed it most often were the ones who did not have big accounts at banks, didn't have the kind of in that would have let them get the money. So that program has turned out to be kind of a disaster as well, in a different way.
So what is your timeline for what this crisis looks like, both from what you understand, the health components, and really whether the economy, I mean, people talk about this being potentially worse than the Great Depression. Do you think that that's in the offing?
I don't think, I don't think it's going to be worse than the Great Depression. I mean, obviously there are people who are saying that, but it doesn't look as if we had the kind of deep structural imbalances. Not that we were fine, but it doesn't really, it's hard for me to see it being that bad, but not as bad as the Great Depression is not a very hard bar to surmount. And in fact, the initial impact, it's quite possible that unemployment at its peak this year will be as high as it was at the worst of the Great Depression. By modern concepts, Great Depression unemployment peaked at a little bit over 20%, and we may well get there. So we're going to have at least an initial hit, but we will probably have a bounce back. But the trouble is, I think very few people I talk to now believe in a V-shaped recovery anymore. There's just going to be too much damage done that will take a while to recover from. So we're looking at something more like a Nike swoosh with a long gradual ascent, which may look pretty fast in terms of growth rates, but then, in the Great Depression, the economy grew 10% in 1933, but from a very low base. So it still felt like the Great Depression. So this is going to, we're the best bet. I mean, this is what CBO is saying, and I don't differ all that much from where they are. We're in a situation where we're unlikely to be back to pre-COVID levels even by the end of next year.
So if that's the case, can you explain what clearly feels and seems like a disconnect to so many people between a stock market, which is, literally back in 2019, 20 territory, I mean, almost just a year ago territory, to where we are right now in the quote unquote real economy?
I'm actually writing tomorrow's column about that. I think the important point to make here, aside from the basic proposition, which is the stock market is not the economy. The stock market has never been a very good indicator of where the economy is going. Paul Samuelson quipped that the stock market had forecast 9 of the past 5 recessions. But beyond that, stocks consider the alternative. What we've seen is a crash in interest rates. The yield on alternative assets is negligible. Real index bonds, inflation-protected U.S. 10-year bonds are yielding minus 0.5%. So if that's the case, if you're an investor who has to put funds someplace, a company that is still profitable despite COVID, and there's a lot of those, particularly tech companies that have got some kind of de facto monopoly rents, looks like a pretty good place compared with the alternatives. At least you probably get a positive real return if you put your money into into one of the FANGs or something like that. So I don't think it's actually that puzzling. I'd actually say, by the way, that this is a longer term phenomenon. If you look at what the economy has done since the beginning of the financial crisis, I mean, the US economy is far worse position, even before this current crisis. It was in a far worse position than people imagined circa 2007. Productivity growth has, after that brief period of internet-fueled productivity growth slumped. The economy is way below where long-term forecasts put it. And it's turned out, of course, that the economy is much more prone to crises than anyone imagined in those days. But stock prices have done really well. If you look at market cap relative to GDP, it's on the eve of this crisis, it was at a record high. It was slightly above its levels at the peak of the dot-com bubble and way above its historical norms. And all of that, I think, is telling you that, look, when alternative assets don't yield very much, people will buy stocks, even if they look very pricey by historical standards.
So this makes sense to you?
I think, God knows what. Am I saying that the current market valuation is right? The answer is I have no idea. Not my department at some level,
Well,
anyway, no one gets it right. But
right.
It's not obviously crazy. The disconnect makes sense.
Let me ask you a different question about the disconnect, which is the issue of inequality and what comes after this pandemic. We had Tom Friedman on one of these calls 2 weeks ago, and he said that he anticipates that the Occupy Wall Street movement is going to look like a knitting circle when this is all over, given the winners and the losers and who's getting bailed out and who's not, and ultimately what this all portends. Do you agree?
Yeah, I mean, he's right in terms of what should happen. I mean, what we're seeing now is the extraordinary. I mean, first of all, this crisis is turning out to be extremely unequalizing just right away. The people whose jobs are being lost, the people who are in exposed industries are much less well paid than the people who are not. If you ask for whom is this just an inconvenience? It's people like you and me, right? People, well-paid people who can, in many cases, work from home, who are able to isolate in relatively less dense areas. And if you ask who is really on the front lines and is suffering high death rates, it's workers in relatively low wage occupations. It's a tremendously unequal impact. And then the existing inequality, we'd already seen a trend in the US where differences in income were translating increasingly into differences in actual mortality, where inequality was becoming a matter of life and death. And that's now even more conspicuous. Basically, whether you have a good income and the right kind of job is having a big impact on whether you're likely to die from this thing. And so there ought to be a huge, genuine populist backlash, a huge demand for a stronger social safety net, for more social justice. I just feel that I'm not sure I understand politics well enough. And in the end, when all is said and done, God knows whether that's actually going to translate into action.
Let me ask you a related question, because you and I have debated bailouts. At least we talked a lot about the bailouts back in 2008 and 2009. What do you make of the bailouts of the airlines, for example, this time around? And, uniquely and interestingly, in this case, it's not just the employees who are getting bailed out, and I think we probably all want the employees to be bailed out, but in this case, the shareholders are being bailed out.
Yeah, which should not be happening. And there will be and should be a lot of recriminations. We've got pretty much an open spigot for a number of industries, some of which probably really not clear that there's any sort of strategic national economic interest in preserving the cruise ship industry. And we really should be doing, I mean, in retrospect, all the people who complained about the auto bailout and socialism and all of that, at least taxpayers got a substantial stake. It was a real effort to make sure that it was primarily a bailout for workers, not for shareholders. And we're not doing that remotely in this case. So it's kind of unfair stuff. On the other hand, I will say that I'm less outraged than I might be at the unfairness of all this, because we have to move really fast. And we're living on COVID time now. Economic shocks that normally you would expect to take a year now take a week. And so things are not going to be all that well designed. And I'm much more concerned about who isn't getting money than about who is. So I think the failure to provide rapid aid to state and local governments is a much more concerning factor than the fact that the airlines are getting some free money.
Well, let me ask you about that, because you've written about that. We can also talk about national deficits. I too am tremendously concerned about states and municipalities over the next several years, and what are going to be just the most underfunded operations, and how you think that they are going to frankly survive. By my math, you would have to think that a state like New York is going to have to raise its tax rate, 15, 18% on the high end. I mean, you would have to, if you were trying to balance budgets, you would have to do a remarkable amount. And then the question, of course, is, do the wealthiest people in those states try to move to other states, as we've already started to see some people do, and how you find the right balance to make this work in the future?
Well, I have to say the interstate, the idea, let's put it this way, this is a fiscal crisis that's going to affect all of the states. And there are some projections, but I think they're not fully getting hold of where we are right now. It's not at all clear to me that states like New York and New Jersey are going to be worse hit when all is said and done than some of the states you tend to think of as tax havens. There's a technical issue here, which is, if you take the four biggest states, as it happens, 2 are blue states, 2 are red states. So you've got California, New York, Texas, and Florida. California and New York overwhelmingly rely on income taxes. Texas and Florida have essentially no income taxes and rely overwhelmingly on sales taxes. Which source of revenue is more likely to hold up right now? And I would actually say income taxes, because there are a lot of people, particularly high-income people, who pay a lot of high income taxes, who are in fact able to keep working, who will continue generating income and will continue to pay, whereas sales, consumer spending is crashing everywhere, so that we're going to probably be seeing really severe revenue losses. And of course, Texas, oil is also a big factor. So we're going to be seeing some very severe budget constraints in some of those red states as well. I wouldn't be surprised if within a couple of months we have the governors of a bunch of red states basically marching on Mitch McConnell's office and saying, hey, you know what? We need it just as badly as Andrew Cuomo does. And so but it's a very severe thing, and it is basically crazy, right? If we didn't have this federal system where lower levels of government are required to balance their budgets, it would be completely crazy to be doing a lot of layoffs of school teachers and firefighters just because there's a virus out there. But because we have this system, we're facing what looks like a really nasty crisis that will, it'll hurt the quality of life, and it'll also delay recovery.
Right. I want to get to a lot of the questions we have so many questions coming in. I know Michael is looking through them right now. So let me just ask you one final question before I hand it over to Michael, which is, you have obviously argued for so many years that we can afford as a country to frankly run up our deficits a little bit more than we have, and to spend more on our people. And so the question I have is, do you think that this experience, spending something order of $2 trillion so far, and if not more, and the reaction of it is going to accelerate this? Meaning, do you think that conservatives and Republicans are going to say, you know what, we did it, and the world didn't come to an end, we can do more of this? Do you think it's going to spur a backlash against debt and deficits in this country? What do you think the sort of longer term implication is?
Well, economists, mainstream economists, have been moving towards a more relaxed attitude towards debt. They were doing that even before this hit, and with a lot of evidence accumulating, and particularly when you look at the interest rates at which we're able to borrow, which are ridiculously low, we ought to be relaxed about this. How much it'll actually change opinion, I've, as you say, I've written about this many times, and one thing I've discovered is that the belief that debt must be a horrible, horrible thing, and that there must be a crisis looming just over the horizon is very, very hard to shake. It's not really grounded in experience, it's grounded in people's sense of the way things ought to be, and it's very resistant to evidence. And so I have argued myself blue in the face on this issue, and never seemed to win over very many people. Maybe I'm arguing it wrong, but it just, you go through all of this, you talk about the history of US debt, you talk about Britain. You know, Britain emerged from World War II with debt that was 270% of GDP. And they didn't ever have a crisis. They just gradually grew their way out of it. But doesn't matter. You go through all of that, and the next thing is, but aren't we facing an imminent crisis because of this incredible debt load? And so I don't know. I'm kind of a cynic on all of this.
Okay. Well, on that note, Michael, I'm going to turn it over to you, because I know there's so many people who want a shot on goal and to speak with Paul and to have their question answered. So go for it, Michael.
Thanks, Andrew. And Paul, I've got to say, we've got a complete fire hose of reader questions coming in,
Sure.
So be prepared. One of the topics a lot of people have asked about is actually inflation. And so one listener, Tom, asks, and he's speaking for a lot of people, with all the money being created by the government, isn't inflation inevitable? If not in the short term, then in the longer term. And a lot of people really seem worried about that. So what would you say?
So that's by, you know, I have a new book out called Arguing with Zombies, and which is about not people who are zombies, but zombie ideas, things that won't go away no matter how many times they should have been killed by evidence. And this view that printing money in a crisis is inflationary is certainly a really prominent zombie idea. It's always out there. We went through this. Think about 2009, 2010, the constant warnings about hyperinflation, all of which never came true, even though the Fed, depending on what you mean by it, but by some people's measures, the Fed printed $4 trillion, and money just basically sat there. It wasn't inflationary. And that's very much the case right now. If you look at what the Fed is buying up a lot of assets to stabilize markets. This is why I give Powell an A. And it's and the federal government is running some really big deficits, but all of that is just to offset one way to think about it. Maybe this helps. People are making a rush for safety. People are, personal savings rate, we just got those numbers this morning. The personal savings rate jumped from 8 to 13% just between February and March, and we'll be seeing more of that. People are rushing for safety. People are putting a lot of money into their bank accounts. Those bank accounts, the banks are accumulating that money in deposits at the Fed, which count as part of the monetary base, in effect, show up on the accounts as the Fed printing money, and the Fed is in turn using that to buy a lot of bonds. But it's not actually representing some net amount of money that's being pushed into the system. It's really just the Fed stepping in to recycle money that would otherwise people would try to hoard, and because my spending is your income and your spending is my income, if everybody tries to do that at once, we get a depression. So this is not actually an inflationary. We are not Venezuela. We are not what you're seeing here. The numbers, some of the surface numbers might look like Venezuela, but the story behind them is nothing at all like that. And so, if anything, the risk seems to be deflation, which is what the markets are pricing in. The markets have priced in a substantial reduction in inflation expectations.
Got it. Sort of related to that, there's a related topic, and Brad asks, he's heard the expression, in a foxhole, everyone is a Keynesian. But is there a limit to what the Fed can be doing with that program? Is there a limit to what we can afford, or are there diminishing returns at some point?
Oh, diminishing returns for sure. I think there's very much a question of how much. First of all, nothing the Fed or the Feds, nothing that the Fed or Congress can do can put people back to work in sectors that we have to keep closed to contain the virus. So there's a special limit on what we can do right now. So this is, I get kind of mad when people call what Congress did stimulus. It wasn't stimulus, it was disaster relief. This is in many ways, this is actually not a Keynesian moment. This is a different kind of crisis altogether. But in terms of the Fed's ability to do stuff, buying unconventional assets, which is quantitative easing, has to be one of the least helpful terms out there, because nobody knows what it means, and to the extent it seems to mean something, it's not at all what actually happens. But the Fed buying unconventional assets, I've always been a skeptic about how effective that is. I think there are times when it matters quite a lot. In the second half of March, the Fed standing ready to buy stuff was really important. But most of the time, it's a limited. It's not at all clear that it does very much. And once conventional interest rates have hit zero, as they have, how much trying to get a little bit of extra traction by buying long-term bonds, whatever, how much that does is very much up in the air. It's really, the Fed is no substitute for fiscal policy on those things.
Got it. A lot of readers are asking to sort of compare the U.S. response and its prospects to other nations. Mark asks, how or will countries with stronger social safety nets, how will they fare compared to the U.S.?
Yeah, so no, there's an interesting, there's a big transatlantic divide in how we're dealing with the sort of necessary unemployment, the workers that can't be allowed to work at the moment. And the European style is basically urge firms to keep the workers on payroll, and the governments will pick up the tab. And the US approach is let people be unemployed, but we'll provide generous unemployment benefits. There's something to be said for each of those. The European style presumes that workers are going to go back to the same jobs they had before, that there won't be big structural changes in the economy in the wake of the virus. And it's not clear to me that that's a really good bet to be making. So there's something to be said for the American system if we did it right. And the problem is that we ran it through these state unemployment offices, which are completely overwhelmed. Now, I did say transatlantic because the Canadians have done something that in principle is rather similar to ours. They have an emergency economic benefit available to people who lose their jobs. But instead of our sort of patchwork attempt to use an overwhelmed system, they created a special program. They created a federal portal, a federal hotline. And in Canada, people are getting their COVID economic unemployment benefits in a matter of days. So the money is flowing out quickly and to those who need it. We could have done that. So we've screwed up the implementation. It's not clear to me that the philosophy is wrong. And the European countries, I think, are going to be having their own problems. They've certainly been much more willing to get right at the problem and do something for workers, but it's not at all clear that their model is going to be, particularly as time goes by and as the economy starts to come back to something closer to normal. I think Europeans may find that they've actually made a bad bet by trying to by trying to structure their program as if everything will be the same a year from now.
All right. There's a related question about Europe, and it's sort of broader and EU focused. Armin asks about the reluctance of European finance ministers to reach some sort of consensus on a relief fund. And so Armin asks, what would be your advice to this group, especially since their reluctance seems to challenge the EU's strength?
Yeah, it's very, I mean, the lesson I thought we learned from the Euro crisis of 2010, 2011 was that having a currency union without a fiscal union is a really problematic thing. And even if they're not ready to go the whole hog and have a US-style fiscal union, and of course ours is turning out because of the state and local issue to be imperfect, but still better than theirs, at least when you have something which is very clearly an act of God, a natural disaster that is not the fault of countries. Italy is not in trouble because it was irresponsible. Italy is in trouble because they just happened to get hit by the virus especially hard. That would be the occasion for doing Corona bonds, for doing some kind of system where you help out the vulnerable countries. And they appear to be incapable of even doing that, which bodes very badly for the whole European project. If they can't come together to face a pandemic, what can they come together for? I stopped short of saying, well, that this means that the euro is going to break up, because what we keep seeing is that Europeans are deathly afraid. No one country seems to be willing to take that plunge and go off the currency. But they really are. All of your worst fears about the European inadequacy in the face of crisis is being borne out by what's happening right now.
Okay. There's an anonymous question that asks, basically, it asks about the U.S. dollar as the world's reserve currency and whether this is being jeopardized by all the bailouts.
No. First thing to say is actually that the dollar's role as a reserve currency matters a whole lot less than people think. I mean, yes, the U.S. can borrow cheaply, but so can a lot of other countries. And we do get a fair bit of seigniorage, basically revenue from printing money, not from the fact that people use dollars in their accounts, but from the fact that people actually hold $100 bills overseas. So basically, we reap the revenue of providing liquid assets to drug lords around the world, and that's not something to be especially proud of, and not a very big deal for us anyway. But anyway, but to the extent there is the role of the dollar as a reserve currency, I don't think that the deficits, the bailouts, those are not really risks. The markets don't think they pose a risk to U.S. solvency, I think rightly. If you ask what does pose a risk, well, Lindsey Graham poses a risk. That suggestion that we default on our debt to China to punish them for their virus sins, I mean, I hear a lot of bad ideas, but that may be the worst idea I've heard in years, because that would undermine the fundamental thing that underpins the special role of the dollar is the belief that the United States is a country that obeys rule of law, and that when the U.S. makes a promise, it's a real promise. And if we're going to start politicizing that, oh boy.
All right. There's another anonymous question that asks, what do you think about temporary basic income to help ameliorate demand shock when we're out of stay-at-home orders?
Well, some kind of broad-based stimulus may be necessary, though that's not totally clear. But I think the most pressing thing, again, is aid to state and local governments. That would be doing a whole lot to sustain demand. And for that matter, we're a long way from where all of the workers who've been furloughed because of the virus will be able to return to work. And so we want to continue the extended unemployment benefits. And I've actually been trying to tell people with considerable pushback that what we're seeing right now is actually making the case against universal basic income. If we had some kind of basic income that everybody gets, it would either be grossly inadequate for people whose jobs have just disappeared in this crisis, or would be inconceivably expensive because you're having to pay it to people who haven't lost their jobs. So this is we're kind of getting a demonstration of why the safety net should be things like unemployment insurance and not just a no questions asked basic income.
Okay. Yet another anonymous question is asking, when will recent graduates recover from this high unemployment?
Oh, that's easy. Never. I mean, I'm sorry, but that's I'm saying being flip, but I'm also being real. We actually have a fair bit of research now. People, we know what happened to graduates who graduated into previous recessions. And the answer, and compare them with otherwise similar graduates who graduated either just before or just after those recessions. And graduating in the wrong year does permanent damage to your earning ability. You basically miss a rung on the ladder and you never get to make that up. It's a sad thing to say, but this is really bad news for students coming out into the middle of this. This is a really, really bad thing, and nothing, all the historical experience says it's going to color your whole life.
All right. And we've got a final question from Rick, who asks, what makes you nervous regarding society, politics, or the economy? What are the worst nightmares to keep you up at night? And let me add a sort of more hopeful note as well, which is also, what does make you hopeful? What sort of glimmers of light do you see as well?
Okay. In the end, the economics and this is grim. This is awful. But we will get through it. The pandemic, particularly if we open up too soon and mishandle it, could kill a lot more people. But those of us who are still alive will make it through that. The things that scare me are primarily political, and I'm just deeply worried about the survival of democracy. We've seen a couple of European countries now, Hungary most spectacularly. We've seen how easily a country can slide from a democratic government into first de facto autocracy, and now under cover of the virus, pretty much explicit, open autocracy. They just there's a democratic nation that has become a dictatorship again, and we don't look that different. It's not that hard to see how that could happen here. Could happen. We could be in that state within a year. So the potential, I think very real potential for the death of democracy is the thing that scares me most. The thing that I'm actually been feeling encouraged by, on the whole, the way that the American people have reacted to all of this. Most people have dealt with this economic crisis, the lockdown, all of the stresses, with pretty good behavior and pretty good humor. It's actually been, we've had noisy demonstrations in front of state houses and all that, but they turn out, you look at the wide angle camera shots, and they're actually, it's a tiny number of people. The public overwhelmingly is showing a degree of responsibility. And if you look at the way people are behaving, once it was, we got clear signals that people needed to behave differently for the time being. Most people did. I'd say on the whole, I'm feeling better about the responsibleness, and the resilience of Americans as a group. Now, I wish our politicians were as good as our people, but I think on the whole, I'm feeling pretty good about Americans right now.
All right, thanks so much, and we'll wrap it up. So Andrew, it's back to you.
Thank you. That was fascinating. Paul, thank you. Michael, thank you for navigating all of those questions. And we want to thank everybody who's been on this call for hanging with us and participating in this discussion. Paul Krugman, thank you so very much for joining us. We were truly privileged to have you aboard for this call. I should also let everybody know that, as I said at the outset, if you want to hear a replay of this call, we'll make it available in the DealBook newsletter tomorrow morning. It'll be on nytimes.com, and also we will definitely push it out over social media. And of course, if you want to find out more about the full slate of digital events, including the next DealBook debrief, please visit timesevents.nytimes.com. In the meantime, please, please, please stay safe and healthy out there, as sane as you can in between. And we look forward to talking to you very soon again. Thanks again.